Hi, it's David from Mortgage Choice. Well, you would have seen the news already that the RBA has increased the cash rate by 25 basis points, which brings the official rate to 4.1%. In terms of home loan rates, this will likely put you around the high 5% mark or even the low 6% mark. And what we really need to consider right now is it worth fixing in? Maybe for 1 year, maybe for two. Do we want to lock in a rate while we've still got the opportunity to keep it relatively low? And while it's going to take a next, 5, maybe even 6 months before rates really start to come back down. Right now, lenders are offering fixed rates for 1 and 2 years from 5.49%. So if interest rates right now are sitting at the high fives and 6%, then they might go up a little bit more. It's going to take a little while for them to peak, plateau, and come back down to that 5.5% mark. So maybe a 1 year or even a 2 year fixed rate is worth considering. Definitely need to reach out to myself or to your mortgage broker about that, just to make sure that it's right for you and to confirm the rates that are on offer for your bank. But it is something a lot of clients are considering right now. So, and especially over the last month as well. In terms of some good news, first home buyers do have a great opportunity to get into the market. There isn't quite as much stock as we were expecting, and prices actually haven't dropped as much as we were expecting. In Melbourne, they've pretty much held steady across the board. So some places have dropped, some have actually increased a little bit. So maintained relatively steady. But first home buyers do have a lot of benefits for them to utilize and get into the market. A stamp duty waiver for purchase prices under $600,000, $10,000 grant if they're buying a brand new house, not an established that's been lived in, but brand new. And there are still more government guarantees and schemes that allow you to move in with just a 5% deposit plus 3 to 4 grand worth of costs. So fantastic schemes out there, fantastic opportunity for first home buyers. And again, unexpectedly, we have actually had a lot of people, a lot of first home buyers entering the market over the last few months, despite what's happening with these rates. They've decided they just need to get in. They're sick of renting and the rental crisis going on as well. Not cheaper to own, but it's getting pretty close. So now, if you are struggling with repayments and this is that final straw that's really going to tip you over the edge, please reach out to us and we can recommend how to approach your bank and what your bank can offer in terms of assistance. It is very important that you do so before calling the bank directly, because there are certain policies and procedures that they follow. You want to make sure that you're taking the right steps in order to achieve the best benefit for yourself and the right benefit for yourself as well. On that point, when you go onto a hardship program, that is noted on your credit report and it will stay there. So essentially it's a terrible band-aid solution, because once hardship is over, other lenders in future, when you want to refinance, will see all of that hardship and they'll want to make sure that you are absolutely caught back up, which might take some time. So you might be fixing the solution temporarily now, but causing some more problems down the track. So that's why it's important to speak to a broker about what options are available, what that actually means for you in terms of the next, short-term and long-term future, next 1 year to 2 years and 5 years on your credit report. So please reach out if you have any questions there. The last thing, which I did touch on a little bit, is the market. It hasn't actually changed as much as we were expecting. It's held pretty steady. There's actually, as of the last quarter, a 0.1% increase, in general across the Melbourne market. So this has happened because of a few reasons, but primarily people aren't selling. Not many people are listing, which has meant they don't have to reduce their prices because there isn't as much stock, which is keeping that price relatively high. So very different market to what we assumed would come our way. And we're going to have to keep on watching what happens. We're right in the middle of that fixed rate cliff that everyone is talking about, with, majority of fixed rates that have been set over the last few years expiring between April and August, September. We're right in the middle of it now. And we're starting to see a lot of people coming off of 1.89 and 2.5% rates, jumping up to 5.5%, 6%, as I've said for the last few months. So this is where it gets really tricky. I'll leave you on one final point. Mortgage prisoner is a term that gets thrown around a lot. It can come down to two factors, essentially: affordability and equity. If you don't have equity in your property, can't move to another bank. If you don't have the income to show the new bank that you can afford your current debt, which they do reassess, you can't refinance. Some banks are implementing some different processes and different policies to help with that, though. Some big ones are essentially, as long as your repayments are lower than your current repayments, you can move. Another one is decreasing the buffer they put on your home loan when they're assessing your affordability. They decrease that buffer from 3% down to 1%, which is a huge increase. And then there are also lenders that are happy to take on clients, even just for their home, on an interest-only term for 1, 2, 3, 4, even 5 years, whilst they get through this tricky period. It's a higher rate. It is a band-aid solution because you're not paying down your balance, but it does get you through if you really, really need that kind of support and you don't want to go into the hardship option with your lender. So plenty of options out there if things get really, really tight, but it's really important to reach out to your broker and make sure that you're going through the right one. So please give me a call if you have any questions, and hope this has helped. Look forward to speaking soon.